All right, welcome to this explainer. Today, we're cutting straight through the marketing hype to look at how AI automation is actually functioning right now in 2026. We're talking about a massive fundamental shift, everything from the workflows running a local small business all the way up to the sophisticated algorithms trading on Wall Street. So if you've been wondering what it actually looks like when AI upgrades from a helpful little co-pilot to a full-on hands-free autopilot, well, you are definitely in the right place. Let's get into it. To kick things off, let's start with a brilliant reality check that perfectly sets the stage for our whole journey today. This quote from NextGenX Insights hits the nail on the head. You know, there's the flashy, effortless AI you see constantly scrolling through your LinkedIn feed, and then there's the gritty reality of actually deploying this tech inside a real, messy, working company. Today, we are strictly focusing on that reality. So here's the crucial shift we need to understand. True automation in 2026 is no longer just a fun experiment. It's not just a chatbot where you copy and paste some text back and forth. Honestly, that was the old custom GPT phase. The shift we're living through right now is all about deeply integrated logic. AI is being embedded directly inside the software you already use to measurably replace manual work. And we're talking with strict logging, safety guardrails, and a crystal clear return on investment. Section 1, Workflows versus App Builders. Okay, to really apply this, we first have to cleanly categorize the tools we actually have at our disposal. And listen, mixing these two up is literally the #1 reason small businesses fail when trying to deploy AI. It's a huge divide. On the workflow automation side, you are basically orchestrating software you already pay for, like telling Zapier or NAN to connect your CRM to your email. On the other side, you have AI app builders like Lovable or Bolt. This is a totally different ballgame where you're asking an AI to write brand new code from scratch to generate entirely new software. You absolutely have to know which of these problems you're trying to solve. And the financial reality of these paths, it's stark. If we break this down into buy, integrate, or build, you can really see how the costs and timelines just explode. You can buy a basic off-the-shelf SaaS subscription for, say, $100 a month and deploy it in a couple of days. But the second you decide you want to build a custom AI app from scratch, you're suddenly looking at an initial investment of $15,000 to $80,000 and a deployment timeline that can drag out to 6 months. Let's look under the hood of that workflow automation side for a second. Your costs scale very, very differently depending on the platform. Zapier is amazing because it has over 7,000 integrations, but they charge per task, which, let me tell you, it gets expensive fast. Make.com gives you a great visual flowchart and charges per operation. But if you're building complex AI agents, NAN is fascinating. It's self-hostable, AI native, and it charges per complete workflow execution. At scale, that is a massive cost advantage. Flipping over to the AI app builders, these things are growing faster than any software in human history. Lovable, for instance, just hit $300 million in annual recurring revenue because it can literally output full-stack apps from natural language. Bolt.new gives you this completely frictionless building experience right in your web browser. And then there's Bubble, which offers a lot of maturity for SaaS founders. But a quick warning here, platforms like Bubble often come with severe vendor lock-in. If you want to migrate your app later, it can be an absolute nightmare. Section 2, the security blind spot. Speaking of risks, let's talk about the most underreported vulnerability in the modern business landscape. 45%. I really want you to let that number sink in. Almost half of all AI-generated code actively contains security flaws. It really begs the question, are you adopting AI to speed up your business, or are you just buying a massive, expensive vulnerability? The danger zone here is very real, guys. For example, there have been massive data leaks simply because AI-generated database code was missing basic row-level security. So sure, you might feel like a genius saving 50 grand on a dev team by using an AI app builder, but if that generated app accidentally leaks all your customer data because the AI just forgot a basic security policy, that cheap little pilot project suddenly becomes a reputation-destroying disaster. Human security audits are absolutely non-negotiable. Section 3, automating financial markets. Okay, so we've seen how these tools act as co-pilots for business operations. Let's scale things way up to the macro level. Let's see what happens when AI takes the autopilot seat in wealth management. The foundational piece of this is the robo-advisor. At its core, this is just automated, algorithm-driven portfolio management. But the beautiful thing here is that this pure math approach strips away the really expensive human element. It completely democratizes wealth management. It brings portfolio optimization to an everyday retail investor who might only have $500 to start with, rather than the $50,000 minimums you'd need for a traditional planner. And the evolution of this space is just wild. Back in 2015, automated finance was mostly simple allocation algorithms, managing about $60 billion in passive ETFs. Now, it is transformed into a highly sophisticated ecosystem. We are literally seeing generative AI and models like GPT-4 sitting right alongside traditional financial advisors at massive institutions like Morgan Stanley, acting as these incredibly high-powered assistants for research and client communication. Section 4. Algorithmic Trading in Action. But what happens when we go a step further? What if we remove the human advisor entirely and just let code execute trades based on massive datasets? Well, let's geek out for a second on this fascinating research paper from the Singapore Institute of Technology. These researchers optimized big data algorithms specifically for the S&P 500. It shows us exactly how institutional-grade algorithmic trading synthesizes multiple real-time data streams to outsmart the baseline market. The big takeaway here is that a successful trading bot isn't just staring at one simple price chart. It uses a really complex, multi-layered signal. We're talking strict macro trend alignment using a 200-day moving average, combined with a 63-day momentum strength ranking, plus adaptive risk controls like a 14-day average true range trailing stop just to manage volatility. Basically, it only executes a buy when every single one of these mathematical conditions is perfectly met. But here's where it gets incredibly cool. This shows us how we can take the raw, cold math of those technical indicators and combine it with the linguistic power of AI. The researchers used a specialized language model called Finbert as a gating mechanism. It actually reads and extracts sentiment from the last 2,000 characters of corporate earnings calls. If the CEO's tone sounds fundamentally negative, the AI steps in, overrides the perfect technical setup, and blocks the trade. It is literally listening to the tone of management to avoid a bad setup. How amazing is that? And the proof is absolutely in the returns. By layering momentum, those volatility stops, and that genius AI sentiment analysis, the enhanced strategy completely crushes it. It charts a massive 466% return compared to the 299% baseline. And maybe even more importantly, it fiercely protects capital by minimizing drawdowns when the market tanks. It is just a stunning display of what automated execution can do. Section 5, the 30-day pilot. So we've covered a ton of ground today, right? From small business app generators to Wall Street trading algorithms. But honestly, none of this matters if you don't have a structured framework to actually implement it in your own work. You have to be aware of what we call the execution gap. The hard data shows that roughly 40% of small business AI automation pilots fail within 6 months. Why? Usually because of a severe lack of baseline measurement and a really bad habit of blindly over-trusting the initial AI outputs without any human review. You need discipline here, not just hype. To make sure you don't become part of that failure statistic, here is a highly actionable 30-day framework. Step 1, measure your current baseline for a specific task. Step 2, decide whether you're going to buy off the shelf or integrate existing tools. Step 3, shadow deploy the AI alongside a human worker to compare results. Step 4, move it to partial autonomy with strict human review. And finally, Step 5, on day 30, you make a ruthless keep or kill decision. Look at the hard metrics. If the AI didn't improve your numbers, kill the pilot. Simple as that. Which brings us to the ultimate question we all have to grapple with as we explore this space. In 2026, we have clearly seen that AI can write your code, it can intelligently route your emails, and it can even trade your stocks with unbelievable precision. But when we finally hand over the keys and flip the switch to autopilot, who is ensuring it's actually flying in the right direction? Thanks for joining me on this explainer. I really hope this gave you a clear, structured way to think about the true reality of AI automation. Keep learning and always, always keep questioning.